GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's so on point, even porcupines are jealous. I'm your host, Jay Hamilton, and today we're diving deep into Blast, the fastest growing chain in crypto history. Why are we talking about it today? Because their token went live, and I'll bet you're all wondering if you should buy it. And no one better to join us today and give us some investor advice than a legendary Zeneca who woke up $100,000 richer this morning from farming Blast. Zen, welcome to the show and congrats.
Thank you. It's a good morning. It's always a good morning when you wake up with a big fat airdrop to claim. So yeah, happy to be here as always and excited to chat all about Blast.
Amazing. Let's start with what is Blast for those who might not know, and even for those who do know, brief, what is Blast and why is there so much hype around it?
Yeah, so Blast is a layer 2 built on top of Ethereum, like Optimism, Arbitrum, things like that. And the thing that differentiates it between the others is that it has something called native yield. Basically, when you have ETH or their stablecoin just sitting on the chain, whether it's in your wallet or deposited to any dApp or anywhere, it's automatically earning, a 3%, 4% yield if it's ETH or a 10% yield if it's a stablecoin, which is kind of a game changer compared to how ETH and stablecoins work on any other chain. And so it's been getting a lot of hype ever since it was announced late last year. I think it was maybe October it got announced. And they had this airdrop farming season running from late last year till now. And so people have just been farming it in one way or another, and a lot of hype and speculation on how much it was going to be worth, what it was going to launch at, whether it would be worth farming. And today was the day that it finally launched, and we got to see what it's trading at, and a lot to break down there.
Okay, let's jump into that just a second. But I want to, later on in this episode, we're going to come back to the season 1, and more so we're going to look ahead to season 2, or what they're calling phase 2 of their points program, because there is a lot of opportunity, I believe, and I think you believe as well, Zeneca, to get involved. Even if you missed the first season, there's still a big farming opportunity. So make sure you guys stick around to this episode to hear that. But as you said, token went live just a few hours ago before we started recording. And let's just take a look at where their token is sitting at. So Zen, what are you seeing based on their token launch?
First thing is it launched at a lower valuation than I think most people were predicting. If you look at Arbitrum and Optimism, they're both at around 8 billion FDV, fully diluted valuation. And, there was speculation on where Blast would launch. Would it be slightly higher, slightly lower, around the same? Because if you look at the TVL, the total value locked, it is the second highest of all the L2s. It's the amount of money that has been deposited and is used on chain on Blast is second, I think, only to Arbitrum or Optimism, one of the two. So yeah, there's a lot of speculation around FDV, and I saw estimates everywhere from 5 billion FDV to I think 17 billion was the highest. It launched at 2. It's 2.5. I mean, it launched higher and then immediately crashed to 2. So that right out the gate is lower than I think what most people were expecting. I think certainly some probably predicted that it would come out at this price. But so that was a little, I guess, caught people off guard. The next thing is, I guess, what happens next. And we've seen a lot of people, I think over 50% of people have already dumped their airdrops. So it's clear that a lot of people were finding this, and the idea was to just take as much money as they could as quickly as they could, either to recoup if they had some losses or just lock up some profits. Personally, I think that is kind of bullish that all this selling has happened now and that there is a lot more room to move up. I find it hard to believe it's going to tank significantly more from here. 2 billion already seems like a pretty low FDV for a fully functioning L2 with a lot of users and apps and native yield. But how long is a piece of string? It's questions we don't know the answer to, whether it's going to go up or down from here. It could do anything. I'm cautiously optimistic that price has close to bottomed, if not bottomed.
Okay. You mentioned a couple of stats. Let's just take a look here, because their stats truly are incredible. For those watching, I've got a slide from their deck that highlights their key stats. For those listening, Zeneca, take us through what stands out to you from this slide.
Yeah, so this slide throws a bunch of numbers at us. 3 billion is the bridged TVL, 2 billion in TVL, 1.5 million users, and over 200 live dApps. Obviously, they heavily incentivized all of this, and so you have to take these numbers with a grain of salt. I think the 1.5 million users is probably the one that is the most unlikely to be true. That's obviously a lot of bots, a lot of multi accounts. There's probably not even that many users like on a day-to-day basis transacting on all chains, let alone specifically on Blast. But like numbers can't lie. Like things like bridge TVL, like you can just look on chain and see, yes, there's been $3 billion of value bridged over to Blast. That's people taking ETH, taking stablecoins from ETH mainnet, from other L2s, and specifically moving them over to Blast. Again, because there were incentives there, but also because there were apps there and the native yield element. Like if you had a bunch of stablecoins, in my opinion, the best thing to do was literally just go to Wasabi, one of the apps on Blast, and deposit it into their vault. You'll earn, I think it was 10, 11% yield, which is already great. And you're farming the airdrop as well. So I think that while there's some fudging of the numbers here where it's not, it doesn't exactly tell the true accurate picture, is generally bullish. And I think these numbers are significant enough to make a difference.
Yield on stablecoins. I don't want to diverge too much, but I've just got to ask this question because everybody is talking about yield on stablecoins, and it makes so much sense. We should be, if you hold a stablecoin, you should be getting yield on it of some sort. And we have Athena, which is offering, it's somewhere from like 15. I've seen it as high as like 40% yield on their stablecoin. I don't think that's sustainable. Obviously, just curious, what do you do with your stablecoins? Do you hold them on Blast? Do you hold USDB? Where do you hold, and do you get yield on it?
I actually don't have that much in stablecoins at the moment. I've taken like a lot out of crypto over the last 6 months, but basically, yes, for what I do have, it's on Blast in USDB, either just sitting on Blast or in a Wasabi vault. And I'm kind of planning to sell some of my airdrop and probably park it in stables and probably park that right back on Blast in a Wasabi vault because it's kind of, you compare it to most traditional investments and 10%, nothing is ever risk-free in crypto, but it's pretty low risk as far as these things go. It's unlikely, like, you're not going to get the rug pulled out of you, or there's a very, very low chance that the rug is going to get pulled out of you. What is more likely to happen is that over time, the yield might go down. In a year or two, it might be 7%, 6%, 5%, 4%, depending on other market factors. But as of right now, it seems like a great place to earn 10% on your money.
Completely. Okay. Other news that came out was that Coinbase is going to list Blast as well. Does this surprise you?
It does. It does and it doesn't. They listed Blur, and Blur was the previous token by the same team. Blast is built by the same team that built Blur. And so it was clear that they had like the right connections and ability and significance to get listed on Coinbase. The thing that is somewhat surprising, though, is that Blast is kind of a competitor to Coinbase's own L2 chain Base. And so potentially there was, some people thinking, oh, they're probably not going to launch, or they might not launch Blast on Coinbase because they don't want to sort of support a competitor. But clearly that just was wrong, and they're happy to list it, and they'll make money off the trading of it, and it is kind of good for everyone, I think.
And why is it so important that large centralized exchanges like Coinbase list your token?
Yeah, Coinbase especially it's the biggest centralized exchange in the world. And there are a lot of, most people listening to this are probably familiar with transacting on chain. They'll have like a MetaMask or a Rabby wallet, or they'll know, how to use Uniswap. But most people in the world that buy and sell crypto don't do it on chain. They do it via a centralized exchange, a Coinbase or a Binance or a KuCoin or a Kraken. It basically unlocks a lot of capital, liquidity, and users to be able to trade the token who would probably not have traded it otherwise. And it's especially important in the case of Blast and other tokens that are on like an L2, because in order to like buy Blast outside of a centralized exchange, you would have to get ETH or some other stablecoin onto the Blast blockchain, which would mean you're like sending it to ETH and then bridging from ETH over to Blast and then going to Thruster or one of the exchanges, decentralized exchanges on Blast, and swapping. Coinbase basically means so many people have a Coinbase app on their phone, or they log into Coinbase. That's where they keep their money. They can just, if they want to buy it, they can buy it. If they want to sell it, they can sell it. It makes it a lot easier, and it just generally is bullish for token prices. It's sort of like not always the case that a big centralized exchange listing is going to be good, but generally it seems to be good.
Yeah, it feels pretty bullish when Milk Road and everybody else is going to be talking about Blast this week. And then, the normies out there maybe see it, but they're not listening. They're not deep in podcasts and in reading this content, but they see Blast come across their feed, probably a few times. And then all of a sudden it's listed on Coinbase. And now you're like, okay, like maybe I should buy this. That opportunity obviously makes a difference. Okay, let's zoom out for a second. Talk to us a little bit about your view on Blast and your investment thesis. Is it I don't know if it's more from like the business fundamental side and you're excited about the team and the native yield that we mentioned and their vision, or you have other thoughts, but would love to get an idea of the way you think about Blast and where you think it's going to fit into your portfolio long term.
I've basically, for the last year plus, been super bullish on two specific L2s on ETH. One is Base and one is Blast. And I think that Base it's Coinbase's baby. We've just spoken about how significant Coinbase is. They have their own wallet. They have tens of millions, maybe even hundreds of millions of users at this point. They're very good at onboarding. They're very legit in America, especially. They've always abided by the law and done so much to push crypto forward. So I'm very bullish on Base. I'm very bullish on Blast as well for different reasons. I think the two that stand out are native yield and incentive design. Native yield is just something that no other L2 or even I think L1 or any blockchain that I'm aware of offers, which is kind of a game changer. You're using apps, you have money on the chain, and it's just inherently earning yield. It's a game changer for users, but it's also a game changer for app developers. I think I might have spoken about this last week or on a previous show, but there's this app on there called IKB. It's a daily fantasy sports app, and it has 0% rake. And that's kind of unheard of on the daily fantasy sports or in any gambling sphere. Normally the company running it has to take a rake. And in the case of like DraftKings and FanDuel, the two other bigger competitors, I think it's like 10%. Being able to offer a product with 0% rake because you're earning yield on like customer deposits is a massive game changer. It also enables things like refundable NFTs, which almost eliminates the risk for someone to buy an NFT, where at any point you can just get your money back if the team is not doing what you want. And the team is still getting paid because they're earning yield on, they sell 1,000 or 10,000 NFTs at, 0.05 ETH. That money is just sitting locked in a vault and they get to earn the yield on it. So I think the native yield is huge and unlocks a lot of possibilities. And then the incentive design element is that Pac-Man, the founder of Blast and Blur as well, has shown that he is kind of a genius at thinking about incentive designs and keeping people using the chain, attracting users, attracting developers. We've seen a lot of cool stuff built. We've seen some existing apps bridge over to Blast because of the incentives and things like that. And so that keeps me bullish on Blast for like the next year at least. And then, a year is a long time in crypto. We got to see what happens from there. And then you put all that together and you look at what it's like currently valued at roughly 2 billion, 2.5 billion FDV and compare it to the other L2s. Like I'm planning to basically hold almost all of my airdrop at this current price. Maybe I'll sell a tiny amount, but I don't really feel like this is a good point to be selling. And if I had dry capital on the sideline and didn't have exposure to Blast, I'd be looking to buy. But personally, I'm just like mostly holding the stack that I have.
You bring up the incentive design, and we're going to talk about phase 2 in a minute and give you guys details on what that is. But before we do, I just want to talk about the vision of Blast for a second, because they also released a slide that sort of shows their vision for not just the chain, but something bigger than that. Can you sort of walk us through this, give your take on your thoughts on this vision?
In their own words, they put out an article and basically said that L2s as they currently stand are kind of like Android, to use the mobile cell phone analogy, where you can have like the L2 piece, but then you have to use other like pieces of tech to make it all work. Whereas they're trying to build like the Apple of an L2, where they want to build what they're calling a full stack blockchain, which is the chain, a mobile wallet, a desktop wallet, a Telegram bot, and then like an on-ramp, off-ramp from like a centralized exchange or like your fiat bank. And that all sounds great. And I think that if they do that, it's bullish, especially with the native yield. The thing that immediately popped in my mind, though, was like, this is basically explaining Base. The Base chain is already doing these things. They have Coinbase wallet. They have the big centralized exchange and fiat on-ramp. They have all of this stuff already. So it doesn't seem to be like groundbreakingly new. The new thing to me still is the native yield, and like doing all this in addition to that is great, and I love it. But it's not like blowing my mind as, oh wow, they've sort of thought of something brilliant and genius. It's really just doing what Base has already been doing for a while. But yeah, that's their vision, and I think again, if they really lean heavily into attracting developers and users because of the native yield element, and they've built a full stack app. Like just before, like a minute before we hopped on this, I was on my phone, as you saw, like downloading the Blast app to claim my airdrop, and it was a smooth experience. The app worked well, and it seemed kind of nice and clean, and so they seem to be able to do what they're saying they're going to do. Now we just have to wait and see if how they do it. It's all about execution from here on out.
Yeah, you said it. It's one thing to put it on a slide and another to make it reality. But as you said, this team has continued to live up to expectations and to do incredibly well. So bullish on the token, feeling pretty good about the initial numbers. Fully diluted value. I fully agree with you that it is quite low, especially when ZK Sync came out at like 5 billion FDV, which I think, yeah, those not watching Zeneca just made a brain explode motion. That felt so high. And I thought, okay, well, if that's ZK Sync, then yeah, I was in the category of Blast is going to be, 10 billion or something like that. So for it to come in this low, I think is, yeah, really bullish opportunity for those who are currently sitting on the sidelines to not put everything into Blast, but maybe make it a small percentage of your portfolio, 1%, 2%, something on the low end. Don't go crazy here, folks. Stick to your plan. Just because we say something is bullish doesn't mean that you should throw all your money into it. Let's talk about season 2. Or phase 2, I believe it's called. What do we know about that?
Basically, yeah, there's a tweet being shown at the moment, which is phase 2 will last 1 year until June 2025, that's an incredibly long time in crypto. So anything can kind of happen between now and then. 10 billion Blast tokens will be allocated, and half of that will go towards points, and half of that will go towards gold. Points is basically given to anyone that has Blast, has bridge to Blast and has ETH or stablecoins sitting in their ETH wallet. It just passively accrues. So they're just trying to incentivize more TVL bridge to their chain. Gold is given out to people that are building apps on the chain that they can then distribute to their users. So they incentivize people to build apps and to use apps on the chain. The gold will be distributed every month. So yeah, this is a long farm ahead. 10 billion Blast gold is a significant amount of money. I think it's $200 million at current prices. So that's a lot of money to give out over the course of 12 months to users of your chain. Obviously, it depends on the price of Blast. If it tanks, that's not going to be that much. If it goes up, then they could be giving out $1 billion over the next 12 months. I think that my strategy and approach, and I think probably the wisest strategy and approach for most, is to try and use Blast in a way that you're already making money. So like by earning yield on your stablecoins and relatively risk-free, or if you're a proficient trader or flipper, then try trading in and out of NFTs or meme coins or doing this or that. Or if you're good at daily fantasy sports, use their daily fantasy sports app and try and make money there. And think of the Blast gold and points and farming as like the cherry on the top. And like your primary goal should be to earn some money and make money on the chain. And it's nice that you're also farming an airdrop at the same time. I think where things get dicey and risky is when people set out and be like, I'm just going to farm as much as possible and get as many points and as much gold as possible. And I'm okay to lose some ETH in the process. Like I know people that have lost, I think one guy lost 50 or 100 ETH farming Blur and Blast this last 6 months, hoping that the big airdrop would pay off and, more than make up for that. Now that's a very, very risky play, and I don't recommend it for anyone but like the most like the biggest sharks and the biggest whales out there. For most people, I think just look at the chain, explore your options, try and use it in a way that will make you money relatively risk-free in a way that you're happy with, and then you're also farming an airdrop at the same time. And so think of it that way, and I think that's probably how I'm going to approach it as well, and do it in a way that minimizes risk and potentially maximizes upside for time invested.
And the ways to do that in your mind are hold USDB on Blast, so hold their stable coin, play around with their dApps, whichever ones you might enjoy and fit with you, which is also a great way to just get on chain and to experience the on chain world. And then maybe deposit or bridge some stuff over because you get some points, and that's pretty simple. I think the interesting thing to me is this June 25th date, because we are so tied to market cycles, and a year away feels, there's a chance we're still in the bull market, but there's also a good chance we're not. Like, I think that is right on the cusp to me of where I feel that my level of confidence, if it was in Q1 2025, I'd feel pretty good. I'd be like, yeah, I think the bull market's still going, but tough to predict. And that is such a big impact on price. So there's a lot of external factors that are at play here.
I mean, that's all absolutely true. The other notable thing about June 25th and 1 year is that is when the teams, and I think investor tokens unlock. Actually, I'm not sure about investor, but the team tokens for sure. There's like a 1 year cliff, and then they unlock 25% per year for 4 years. So it's a pretty great vesting schedule. Like, it takes 5 years for the team to get their token. They can't dump on users at least for the next year. And so that should lead to some pretty healthy and organic price action between now and then. But there's always that bit of a X factor around the end of phase 2, a year from now. What's going to happen price wise? Where are we going to be in like the macro crypto market? Are we in a bull or a bear? And what is like this team unlock going to look like? Is that going to create an immediate lot of downward price pressure in addition to like everyone else getting their airdrop at that time? Don't try and maximize points in gold and like spend a bunch of money farming. Just try and use the chain and make money on the chain and treat getting points in gold as like the cherry on the top.
Great advice. Zeneca, congrats again on a nice wake up to 100K in your wallet. Thanks so much for joining us today. Really appreciate all your insights.
Thank you so much for having me as always. Looking forward to next week.
Awesome. Thanks so much for listening, everybody. Have a wicked awesome day.
Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.